are going to be dissecting the concept of cost volume profit analysis, which is also known as break-even analysis. Under this topic, we are going to discuss the introduction to CVP. We discuss contribution margin and then contribution margin ratio. We are going to learn about the uses of CVP analysis, the limitation, the underlying basic assumptions of CVP. We're also going to learn about the objectives of break-even analysis. Not only that, we're also going to discuss margin of safety before we move to discussing break-even points, how to estimate break-even points for a multi-product organization. All right, these are the scope of cost volume profit analysis that the syllabus wants you to acquire skills for. All right. So let's talk about CVP analysis. What do you understand by CVP? Simply put, CVP represents the application of marginal costing technique to establish a relationship between cost, volume, and profits at different activity levels in making managerial decisions. I repeat, CVP represents the application of marginal costing technique to establish the relationship between cost, volume, and profits at different activity level in making managerial decisions. Cost volume analysis, also known as break-even analysis, that is where total revenue equates to total cost. I repeat, break-even analysis is where total revenue equates total cost. At this level, a company is supposed to break even. That is, when your total revenue equal to total cost. It's a point of no gain, no loss, such that if outputs exceed the break-even point, there will be profits. Also, if output is below the break-even point, there will be loss. All right, so the break-even point is the point where there is no gain, no loss. That is zero. Now, the break-even analysis or the CVP analysis relies heavily on the behavioral classification of cost, which states that a cost item must be capable of being classified as either variable costs or fixed cost. This is the introduction to CVP analysis. Let's talk about contribution margin. What do you understand by contribution margin? We have done this in some of our previous classes, particularly under optimal product mix and then linear programming. We also talked about this under operating statements. You will recall when we had short-term decisions, I mentioned the areas of application of marginal costing technique to include deleting of a segment, special order, make or buy decision, right? CVP analysis, pricing decision, optimal product mix, and all of that I listed for you. Cost volume profit analysis is also one of the areas of application of marginal costing technique. That is why in my definition, I said that CVP represents the application of marginal costing technique to establish the relationship that exists between cost, volume, and profit at different activity level. So in all these topics that I mentioned, we utilized contribution margin analysis. All right. Therefore, what do you understand by contribution margin? Simply put, contribution margin represents the difference between total sales and total variable cost. It can also be defined as the difference between selling price and variable cost per unit, or the summation of fixed cost and profit. This is the definition of contribution margin. How do you then estimate contribution margin? From the definition, you can quickly calculate your contribution margin, which we have done also in the past. All right. Therefore, how do you calculate contribution margin? Contribution is total sales minus total variable cost. All right. Contribution can also be computed as selling price minus variable cost per unit. We can also calculate contribution as fixed cost plus profit. So depending on the information available, however the scenario is painted, you should be able to determine your contribution margin based on the information available. So that is contribution margin. Let's talk about contribution margin ratio. The contribution margin ratio is the ratio of contribution to sales. All right. Contribution margin ratio is the ratio of contribution to sales, and it is also known as profit volume ratio. It's also known as profit volume ratio, and it can be calculated as follows, depending on the information available. All right. So if in the question, examiner has given you total contribution margin, you also have total sales in the question. Therefore, contribution margin ratio is contribution divided by total sales. If in the question you are given selling price, you are also given variable cost, and you want to determine contribution margin ratio. Therefore, contribution margin ratio will be computed as selling price minus variable cost per unit over selling price. If in the question you don't have all the information in 1 and 2, in formula 1 and 2, but in the question you are given total sales, you are also given total variable cost. So in this instance, contribution margin ratio will be computed as total sales minus total variable cost divided by total sales. Finally, it is also possible in the question you may not be given information to be able to calculate contribution margin ratio using formula 1, 2, and 3. But in the question, you are given fixed cost, you are given profits, you are also given total sales. So in this case, you can easily calculate your contribution margin ratio. Therefore, contribution margin ratio can also be computed as fixed cost plus profits divided by total sales. Remember, fixed cost plus profit will give you contribution, right? Good. So that is, these are the different ways in which you can calculate contribution margin ratio. Now, let me call your attention to some scope of the syllabus of scope of CVP analysis that you are going to study on your own. So I need you go and form a note. You already have it in this learning material, so I don't need to be wasting time and be discussing this with you. So you can form a note. So on the underlying assumptions of CVP analysis, these things are examinables. All these scopes are examinable. So ensure you read them thoroughly. If you can master like 7 or 8 of them, so put it in your class notes, then so that your eyes will not skip it. Then you also need to learn about the uses or areas of application of CVP analysis. All right. One thing I need to mention to you is that CVP analysis is very practical. This is not just about the exam that you want to write. It's highly practicable. Therefore, as you are learning this newly, ensure you get the understanding. All right. For example, like I mentioned, it's highly practicable. For example, if a company wants to seek for loan, right? Depending on the size of the loan, your lender or your prospective borrower can ask, your prospective lender can ask you to provide your business plan. For example, you need a loan like 100 million naira. For simplicity, you need a loan of 100 million naira. Your bank and you approach a bank, your bank can ask you to provide your business plan of your feasibility study report. So your business plan is supposed to supposed to detail how you want to run the business successfully and profitably, A to Z of your business. One of the section of your business plan will include your break-even analysis. Of course, you also have financial summary and all of that. All right. But for the break-even analysis, you are going to indicate whether you are a manufacturing company or you're a service company. Any organization can estimate break-even, can carry out break-even analysis. So it's not peculiar to a manufacturing company alone. So your lender will require that you should submit your business plan. So in that your business plan, you need to insert your break-even analysis on your business. All right. You may be saying that you want to earn a profit of so much. All right. You are going to earn revenue of so much. All these things will be in your maybe 3 years or 5 years financial summary within the scope of your business plan. However, for the break-even analysis, you may have a target. Like I said, in your financial summary, you may have a target that you want to achieve so much profit. But your break-even analysis will help you to be able to determine how many units do you need to produce in a particular year for you to be able to break even. When you break even, remember, you are not going to make loss, you will not make profits. So you want to break even. Therefore, how many units are you going to produce for you to be able to break even? It is also possible you may want to determine how many sales are you going to make in the market for you to be able to break even. In fact, even if you are not borrowing any loan, this is a motivating factor for you within your business plan. Because as a startup, when you are starting business newly, you are not known in the market. Particularly if it's a kind of business that where competition is highly stiff, right? So in this kind of industry, particularly a saturated industry for that matter, so it will take time for the market to recognize your company. Therefore, you want to know how much sales are we going to make in this market for us to be able to break even. We are new. We are new in the industry. So we want to break even. If we make profit at the end of the day, it's a plus for us. But for now, worst case is that we don't want to make loss. So worst case is for us to be able to break even. We are not losing money. We are not gaining any money. We just want to remain in between, neutral. All right. So you want to determine how much sales are you going to make in the market for you to be able to achieve that your target. That is for you not to make profit. So what if you now want to make, even though you are new in the industry, just look at every one of you. So are you new in this class? Boluwaji Adejimi Olalekan Idrisu.
Sorry, sir.
How could all of you just open your mic and be distracting my class? So, even though you are new in the industry, the management may be kind of aggressive in the sense that they want to make profits, because the primary purpose of every organization is to maximize the owner's equity value. You want to make profits. Yes? So, you may want to know, how much sales are you going to make in the market for you to be able to earn a targeted profit? I want to earn a profit at the end of our first year in the market or in operation. We want to earn a profit of 100 million naira. So that's a target. That's our profit target. Therefore, how much sales are we going to make in the market for us to be able to earn or to achieve a targeted profit of 100 million naira? So once we're able to establish that, we establish the level of sales that we need to make, then we need to back it up with aggressive marketing or every other activities that action that the company needs to take in order to achieve the targeted goal. So, like I was trying to say, CVP is not just theory. Not just because you want to write an exam, that's why you are doing it, that's why you are learning. No, it is practicable. Highly practicable. So that is that. So ensure you go through form your notes on the underlying assumptions of CVP, the areas of application of CVP, and the limitation of CVP. So these are the areas I want you to include in your class notes. Now, let's go back to margin of safety. All right, let's talk about margin of safety. What do you understand by margin of safety? The margin of safety represents the extent to which output can fall before a company will begin to incur loss. I repeat, margin of safety represents the extent or degree to which output can fall before an organization or a company begin to incur loss. It represents the difference between budgeted sales and break-even point of sales. It is also the difference between budgeted units and break-even points units or break-even point of activity level. All right. So how do you then estimate margin of safety? You see, margin of safety is just like sensitivity analysis. You know, sensitivity, okay, we have not done sensitivity analysis under risk and we have not done risk and uncertainty, so it may sound strange to you. So don't let me go there. All right then. So how do you then compute margin of safety? There are three different formulas that you can use to calculate margin of safety, depending on the requirements. If in the question, examiner is asking you to calculate margin of safety, and in the question you are only given sales value, and then you have already calculated break-even point of sales. Therefore, the difference between budgeted sales and then break-even point of sales will give you the margin of safety. 2, the second formula you can use. It is possible in the question you are given budgeted activity level. You have also calculated break-even point of activity level. And the examiner is asking you to calculate margin of safety. In this case, margin of safety will then be equal to budgeted sales units. All right. Or you call it budgeted activity level. Let me call it budgeted sales units. Let me do it this way. Budgeted activity. Let me put it down. Minus break-even point of activity level. Or you call it break-even activity, break-even level of activity, whichever one. So that will give you margin of safety. So this one will be in units. This MOS will be in units. So this one will be in Naira. This other one will be in Naira. All right. Then the third one is where you are asked to calculate margin of safety in percentage. So this is margin of safety. To calculate margin of safety in percentage, it will be budgeted sales minus break-even point of sales over budgeted sales. We can also calculate it in percentage in units. So margin of safety in percentage units can be budgeted activity level, budgeted activity level, all right, minus break-even points level of activity, break-even points of activity level. Let me shorten it, no space, of activity level over budgeted activity level. So this will be in percentage. So whichever one is depending on the information available, you can calculate it anyhow you want based on the information available. So this is how to estimate margin of safety. All right. So let's talk about objectives. Let's talk about objectives of break even. The underlying objective of break even. Let me use the working note to express this. Let me use the working notes. All right. Objectives of CVP analysis. There are 4 key objectives of CVP analysis. So I will mention each of them and I will give you the appropriate formula to use. The first objective is to determine the sales value required to break even. How do you determine the sales value required to break even? Like I mentioned to you the other time, management may want to know how much sales they are going to make in the market for them to be able to break even. So to do this, how do you determine it? Therefore, you can then say break-even point in naira. Because this one represents sales value, anything that has to do with sales value, your break-even point must be in naira. If it is in units, your break-even point must be in units. So since we want to determine the sales value required to break even, therefore, the formula to use would then be equal to fixed cost over contribution margin ratio. All right. So to determine break-even points in naira, or to determine the sales value required to break even. So this is the ratio of fixed cost to contribution margin ratio. So this will give you the sales value that the company will need to make in order to break even. Number 2, to determine the units required to break even. This is the second objective. You want to know how many units are you going to sell, or how many units are you going to produce for you to be able to break even. So in this case, my break-even point will be in units. This is break-even point in units. Is computed as fixed cost over contribution per unit. Contribution per unit. Anytime you are referring to break-even point in naira, your denominator must be CMR. When you are referring to break-even point in units, your denominator must be CPU, contribution per unit. All right, let me put it down because somebody will still ask me what is CPU. Okay, let me finish the 4 items before I define CPU, CMR. Then number 3 objective is to estimate or calculate to determine the sales value required to earn or to achieve a targeted profit before tax. All right. So, like I explained earlier today, management may want to know how much sales they are going to make in the market for them to be able to earn a targeted profit of 50 million naira, 1 billion naira, right? 10 million naira, depending on your targeted profit. All right. So to achieve this, we then say break-even points in naira will be computed as fixed cost plus targeted profits before tax over contribution margin ratio. This is the formula to calculate the break-even point or this, the sales value required to earn a targeted profit before tax. The objective number 4 is to determine the units required to earn a targeted profit before tax. So in this case, break-even point in units will be computed as fixed cost plus targeted profits before tax over contribution per unit. All right, so these are the 4 objectives. These are the 4 underlying objectives of cost volume profit analysis. So let me then define the variables. Before I define the variables, notes. The targeted profits, the targeted profits to use is profits before tax. If profit after tax is given, it should be converted to profit before tax. Before calculating or when calculating break-even point. All right. This is shown as follows. So what we are saying is that at all time, the targeted profit to achieve is profit before tax. But oftentimes in the examiner may give to you profit after tax. You need to convert that profit after tax to profit before tax when you are calculating your break-even point. So how do you do this? 2 different formulas you can use. Let me call it number 5 formula now. All right. So examiner may tell you that, okay, let me say, to determine sales value to earn a targeted profit before tax, where profit after tax is given. So if you are given profit after tax, so like I said, you need to convert it to profit before tax. So in this case, you then say break-even point in Naira equal to fixed cost plus targeted profit after tax that is given to you. So you need to first of all convert this profit after tax to profit before tax when you are calculating your break-even point. Therefore, to convert profit after tax to profit before tax, you are going to divide the targeted profits after tax by 1 minus tax rates. So when you divide profit after tax by 1 minus tax rates, it will be converted to profit before tax. So whatever you are going to have thereafter will be profit before tax. You then divide by CPU or CMR. All right. So this is the formula for calculating break-even points where profit after tax is given. Also, it is possible you may be given profit after tax and you are asked to determine the units. So to determine the units required to achieve a targeted profit before tax, where PAT is given. The objective is to achieve targeted profit before tax, but in the question, you are given profit after tax. So in this case, break-even point in units will be computed as the fixed cost plus targeted profit after tax given to you over 1 minus tax rates, then all of this divided by contribution per unit. So these are the 6 different formulas that you can use to estimate. I don't know the problem with you. I don't know why you guys are distracting my class. How many times am I going to tell you to always mute yourself?
Continue, keep trying.
Yada Sisi. I don't know. Why are you distracting me? I'm not asking you any question. I'm not asking you to give me numbers. Why must you be murmuring at the background and disrupting my class? So these are the relevant formulas that you are going to need to calculate break-even point. So please ensure you master them. Now, let me just define, because I know some people will still ask me, what is CPU? So CPU equal to contribution per unit. CMR equal to contribution margin ratio. What is FC? Fixed cost. Then TPAT, targeted profits after tax. TPBT, targeted profits before tax. Then T equal to company tax rates. All right. So that's that. Okay. Now, what else do I need to tell you before we begin to solve questions? Let's talk about, so these are, like I said, these are the relevant formulas. Number 1 to 6 are the relevant formulas that you need to calculate break-even points. All these formulas you have here, majorly they are to determine break-even point for a single product organization. Yada Sisi, if you make any background noise again, I will remove you from the class. You are distracting my class. This is the third time I'll be telling you this. If you repeat it next time, I will remove you from the class.
So sorry, sir. Very sorry.
So let's talk about multi-product
So sorry, sir.
break-even.
I'm very sorry. It was a mistake.
That's okay. So let's talk about multi-product break-even. All right. Now, the break-even point of a single product organization is always different from the break-even point for a company that engage that have different product range. Let me just put it down. The break-even point of a single product organization is different from the break-even point of a multi-product for a multi-product company. This is because a company with product range we have different selling price, variable costs, and contribution. Let me rewrite this side. Different company with product range. We have different products with varying selling price, variable costs, and contribution. Okay, so when you say multi-product organization, a multi-product organization is a company that produces more than one product. Of course, relative to a company that produces only one product. a company can have products, can produce 2 products, 3 products, 4 products, or even more. So as compared to a company that manufactures only 1 product. So when you are calculating break-even points for a multi-product organization, the way you calculate break-even point for a multi-product organization is different from the way you do for a single product company. So the procedure below, the steps below, or let me just put it this way, steps to calculate break-even point in units and sales for a multi-product organization. So this one is more technical relative to a single product. Anytime you want to compute break-even point for a multi-product company, the first step there are about 5 steps. So the first step is to calculate overall contribution margin ratio. So calculate overall contribution margin ratio. This is the contribution margin ratio for the company as a whole. It's not related to any of the products, so it's for the company as a whole. So in this case, of course, you already know the formula for calculating contribution margin ratio. So CMR equal to total contribution over total sales. All right. So that will give you the overall contribution margin ratio. Contribution for the company as a whole, sales value for the company as a whole. Let's say, for example, we have products A and B. Let's say you are given the sales, then variable cost. Let's say product A has a sales of 5,000 for simplicity. Product B has a sales of 3,000. Variable cost of product A is 3,000. Variable cost of product B is 2,000. Therefore, contribution of product A and B will be 2,000 and then 1,000. So let's say these are the information given to us. So you then want to determine the overall contribution for this company. Therefore, you are going to create a column for total. You create a column for total. What's the total sales? Total sales is 8,000. What's total variable cost? Total variable cost is 5,000. Then total contribution will be different between 8,000 and then 5,000, which is 3,000. So if you now want to determine, for example, if I want to calculate contribution margin ratio for product A, this will be 2,000 divided by 5,000. I will get my answer. Contribution margin ratio for B will be equal to 1,000 divided by 3,000. This will give me 0.333, whatever, or 1/3. Or 1/3. All right. Then, if I now want to determine the overall contribution margin ratio, that is contribution margin ratio for the company as a whole, this will then be the total contribution margin for the company, which is 3,000, divided by the total sales for the company, which is 8,000. Whatever I have, I will put it there. So, anytime you want to determine overall contribution margin ratio, it is not the contribution margin ratio for each product. Rather, it is the contribution margin for the entire company. So the total represents the entire company. So that's what I demonstrated this as an example for you. Now, step 2. You need to determine overall break-even points in Naira. Calculate overall break-even point in Naira. When I say in Naira, I simply mean sales. All right. So how do you calculate break-even points in Naira? You already know the formula. Break-even points in Naira is computed as fixed cost divided by the overall contribution margin ratio. So you are supposed to you divide the fixed cost, the total fixed cost within the organization, with the overall contribution margin ratio. That will give you the break-even point in Naira. Step 3, you determine sales mix. Calculate sales mix. How do you determine sales mix? This is computed by dividing the sales value of each product with the overall or with the total sales value for the organization. So that's how you are going to determine your sales mix. Let's say, for example, so let's use the example that we have. Let's use this hypothetical figure that I gave you here as an example. You will notice that the sales of product A, for example, from the hypothetical figures given above. Okay, if I want to determine the sales mix of product A and B, this will then be for product A. I will take the sales of product A, which is 5,000. I will divide with the total sales of 8,000. This will give me the proportion of product A. The sales of product B is 3,000. I will divide with total of 8,000. So this is how to determine the sales mix. You divide the sales value of each product with the total sales value for the company. So in this case, 5,000 divided by 8,000, that's 62.5%, 0.625 or 62.5%. That's the proportion of product A. So that means B will be equal to 0.375 or 37.5%. By the time you add it up, it has to be equal to 100%. Okay, so this is how to find the seismics. Step 4, I'm going to match step 4 and 5 together. But before that, let me separate that. In step 4, you calculate break-even points in Naira for each product. How do you determine this? This can be computed by multiplying Sorry, I was logged out. Let me reshare my screen. Okay, so like I was saying, I don't know. You people just want to get me annoyed tonight. I don't know what you are doing with your speaker that you have it on. You have the rule ab initio. I don't know. You just want to get me angry with you. If I begin to talk now, it will look as if I don't understand. I've said this thing more than this is the fourth time I will be saying this. Why must you leave your speaker on? You are not rats. You are just doing something, disturbing me, distracting my class with background noise. What's the meaning of this? So, like I was saying, step 4 is to calculate break-even points in Naira for each product. How do you do this? To calculate break-even points in Naira for each product, because you have calculated break-even points in Naira in step 2, so you are going to multiply the break-even point you have calculated in step 2 with the proportion or with the sex mix you have calculated in step 3. That will give you the break-even points in Naira for each product. So this can be computed by multiplying the break-even points in Naira in step 2 with the sales mix in step 3. All right. So that will give you the break-even point in Naira for each product. Finally, step 5. Determine break-even points in units for each product. How do you do this? Very simple. This is calculated by dividing the break-even points in Naira in step 4 with the selling price of each product. So that will give you the break-even points in units for each product. So these are the procedures you are going to carry out anytime you want to compute a break-even point for a multi-product organization. So let me put it in a tabular format. All right. So the first item will be products formats. So whenever you are asked to calculate break-even points in units and in Naira, calculating break-even points in units and Naira. So to do this, you are going to use this format. The first column will be products, followed by the sales mix that you have computed in step 3. Then column 3 will then be break-even points in Naira. Then column 4 will be the selling price. Then column 5, break-even points in units. So if you're asked to calculate break-even points in unit and in Naira, you have to first of all compute or determine the break-even point in Naira before you can calculate the break-even point in units for a multi-product organization. Let's say we have product A, B, and C. So you put the sales mix of each product. Pay attention to what I'm about to say. So your sales mix must be equal to 100%. Now, for you to be able to get the break-even points in Naira, so like I said, remember in this step 4, I said that you need to multiply the break-even points, the overall break-even point in Naira with the sales mix in step 3. So you first of all put in the break-even point in Naira for the company as a whole. That's the overall break-even point in Naira. You then multiply the sales mix of the first product with the total. Whatever you have, you put it here. You multiply the second sales mix with the total. You put the answer here. You multiply the third one with the total break-even point in Naira. Then you post. That is one way. If you want to be doing it one by one, fantastic. Go and do your workings. Come and post it there. So you are good to go. All right. Now, for us to be able to calculate the break-even points in units, you need to indicate the selling price given to you for each product. Therefore, as you are calculating the break-even point in Naira for each product, you just determine in Naira, you also determine the break-even points in unit. So if I get this one, immediately I will divide by selling price. it is possible that it's Yadasisi, Olalekan, and Meshach, because I've spoken to them. They are the one causing these network glitches. Yes, I'm very sure of that. They are the one causing it. God deal. All right. So, as you have determined, as you have determined the break-even point in naira for each product, immediately just divide by the selling price to get the break-even point in units. You do for this one, you divide by the selling price, then you get this one. That's how you are going to compute for break-even points in units. Okay. So at this point, now that we are done with all relevant explanation as far as break-even CVP analysis is concerned, so we can then have work examples. Let's have examples. All right, I will stop sharing this and move to the learning material. At least we should be able to solve like 5 questions. If you can't complete it today, in our next class, we complete it. So let's have examples. So go to your learning material and read more. All right. Yes, let me start with illustration number 3. Let me see. Those of you that are making noise in my class. Yes, Yada Sisi, read for us. Read illustration number 3, page 54. Yada Sisi.
Okay, sir. And I would like to apologize to the whole of the class. Like, I literally
It's
want to
okay.
join, and I don't know what I was doing. So sorry for the interruption. Okay, illustration 3. Marina Industry sold 150,000 units of its product at 20 naira per unit. Variable costs are 15 naira per unit. Manufacturing cost of 12 naira and selling expenses of 3 naira. Fixed costs are incurred uniformly throughout the year and amount to 972,000 naira. That is manufacturing cost of 600,000 and selling of 372,000. You are required to calculate A, the break-even point in units and naira. B, the number of units that must be sold to earn an income of 75,000 before income tax. C, the number of units that must be sold to earn an after-tax profit of 100,000 if the income tax rate is 40%. D, the number of units required to break even if variable costs increase by 5% and fixed cost increase by 22.5%.
Yes, thank you, Sisi. This is the question. In the A part of the question, you have to determine break-even point in units and also in naira. To do this, what are you supposed to do? Simple. You go to the question. First thing first, you want to calculate break-even points in units. And you know that this is fixed cost divided by contribution per unit. So you go to the question, identify fixed cost, then you calculate your contribution per unit. That's all. Let me stop sharing because of time and move to the working notes quickly. So here is solution to illustration 3, page 54. The name of the company is Marina Limited. All right. So marina industries. So you are asked to calculate break-even points in units and also in naira. So number A, calculating break-even points in units and naira. That's the requirement. So A1, break-even points in units will then be equal to fixed cost divided by contribution per unit. I will go to the question, how much is fixed cost? We are given fixed cost of 972,000 divided by, I need contribution per unit. Then we go and do work in somewhere. Let's say this is our working. So we want to calculate contribution per unit. Contribution per unit is selling price minus variable cost per unit. So according to the question, selling price given to us is 20 naira, variable cost is 15 naira. Selling price is 20, variable cost is 15. Therefore, contribution per unit is 5 naira. So, because we are going to calculate break-even point in naira, so let's determine contribution margin ratio. Contribution margin ratio is computed as contribution per unit contribution per unit divided by selling price equal contribution per unit is 5 naira, selling price is 20 naira. Therefore, contribution margin ratio would then be equal to 5 divided by 20. That's 0.25 or 25%. So let's go back. CPU is 5 naira. Therefore, break-even point in naira would then be equal to 972,000 over 5 naira. That's 194,400 units. So this is the number of units that must be sold for the company to be able to break even. Number 2, we are to calculate break-even points in naira. This is computed as fixed cost divided by contribution margin ratio. Fixed cost is 972,000 naira. We have calculated contribution margin ratio to be 25%. Therefore, break-even points in naira will be 972,000 divided by contribution margin ratio of 0.25 equal to 3,888,000 naira. This is the number of This is the sales value that must be sold for the company to be able to break even. This is the sales value that must be achieved. That must be achieved for the company to be able to break even. Alternatively, because I've calculated break-even points in units, I can then say break-even points in Naira is equal to break-even points in units multiplied by selling price. Here will be 194,400 multiplied by selling price of 20 Naira. We should be able to get the same thing. 194,400 multiplied by 20. Yes, the same answer. 3,888,000. So that's that. This is how to calculate break-even points in units and in Naira. Requirement number B. According to the question, you are required to calculate the number of units that must be sold to earn an income of 75,000 Naira before tax. So you want to earn income of 75,000. Remember, examiner says number of units. So number B, calculating units required to earn income tax, to earn profits before tax of 75,000. That's the heading. So I would then say break-even point in units equal to fixed cost plus targeted profit before tax over, because the examiner wants me to calculate units, therefore I would then say divided by contribution per unit. So in this case, my break-even point in units to earn a targeted profit of 75,000 will be calculated as fixed cost of 972,000 plus targeted profit of 75,000 over contribution per unit of 5 Naira. So this will be calculated as 972,000 plus 75,000 equal, that's 1122 divided by 5. On the day of your exam, no need to be doing it one by one, step by step. Just add everything together, divide it by 5, move on, put the final answer there. No need to be doing it one by one. It's a waste of time. Divided by 5. This is 224,400 units. So this is the number of units that must be sold for the company to be able to earn a targeted profit of 75,000 Naira. Tosin, talk to me.
All right, sir. Thanks, sir. The addition of 972 plus 75 should be 1047, sir.
Oh, should be one. Okay, let me. 972 plus 75,000. Oh, 1047. See, my calculator gave me 1122. Maybe I pressed something else. 1047. Thank you for that. 1047. That means that shows that you guys are following up. Thank you. So divided by 5. You can see now. In my own eyes, I believe I'm doing the right thing, not knowing that I pressed something else on my calculator. This can happen to you on the day of your exam. You know what you are doing, but you are writing something different in your calculator. You are putting something different in your calculator. All right? So you have to be very careful. When you have the first answer, confirm it again. That's 209,400. 209,400 units. So that's that. Okay. Number C of the question. You have to determine the number of units that must be sold to earn an after-tax profit of 100,000 naira if tax rate is 40%. Number C, units required to earn a profit after tax of 100,000 naira if tax rate is 40%. So in this case, therefore, I would then say break-even points in units equal to fixed cost plus targeted. Remember, the targeted profit is profit after tax. You don't use profit after tax. It has to be profit before tax. Therefore, you need to convert the profit after tax to profit before tax. So I would then say fixed cost plus targeted profits after tax over 1 minus tax rate, all divided by contribution per unit. Okay? So this will be equal to fixed cost is 972,000 plus targeted profit of 100,000. That's targeted profit after tax divided by 1 minus tax rate. Tax rate is 40%. All right, then divided by contribution per unit is 5 naira. Therefore, this will be equal to I will carry my calculator. 100,000 naira divided by 0.6, then plus 972,000. You have to do everything at once in order to minimize rounding error. So 100,000 divided by 1 minus 0.4, that's 0.6, equal, then plus 972,000 naira equal. That's 1,138,666.67. Then divided by 5. That is 227,733. Here is 227,733. Let me confirm. 227,7. Yes, that's it. Let me move to the next line. 227,733 units. Okay. You can also confirm the number from your end, so that we are on the same page. Then about D requirements, which is the last one here. You are told to calculate the number of units required to break even if variable cost increased by 5% and fixed cost increased by 2.5%. That means since your variable cost is changing, that means you are going to have a revised contribution per unit. All right. So let's go and do working for that. Revised variable cost. Per unit. We are told that variable cost per unit will increase by 5%. So variable cost is original variable cost is 15 naira. So 15 naira multiplied by revised variable cost. Let me underline this. Or let me put it this way. Let me put it as if variable cost per unit, if variable cost per unit increase by 5%. So variable cost increased by 5%. So in this case, the revised variable cost would then be equal to the original variable cost is 15 naira multiplied by increase of 5%. That's 1.05. So this will give us 15 multiplied by 1.05. That is 15.75. Somebody will ask me, how did I get 1.05? The 15 naira. The 15 naira is the 100% of the cost. The 5 naira, the 5% increase. The 5% increase, 5% of 15 naira. So this will be plus 5%. So 100 plus 5% increase will give me 105%. Therefore, 105% is the same thing as 105 divided by 100, which is 1.05. So 15 naira is the 100%. The 0.75. The 0.75 is the increment of 5%. So when you add the two together, that's what gave us the 15.75. We're also told that variable fixed cost. We are told that fixed cost, if fixed cost increase by 2.5%. So the revised fixed cost would then be equal to the original fixed cost is 972,000 multiplied by the increment of 2.5. That's 1.025. So the revised fixed cost would then be equal to 972,000 multiplied by 1.025 equal 996,300. 996,300 naira. So that's the revised fixed cost. It's the same thing here. Again, somebody can ask me, how did I get 1.025? The 972 is the 100% plus 2.5%. This will give us 102.5%. So 102.5% is the same thing as 1.025. That is 102 divided by 102.5 divided by 100. 102.5 divided by 100. This will give you 1.025. So that's that. So we have calculated the workings. Variable cost, now that variable cost has changed to 15.75, it means that our contribution margin will also change. Therefore, revised contribution per unit. So contribution per unit would then be equal to, its contribution per unit is selling price minus variable cost. Our selling price still remain as 20 naira, but variable cost per unit has changed to 15.75. So our revised contribution per unit is now 4 naira 25 kobo. Okay, so we then go up there. Number D, the number of units to break even if variable costs increase. Units required to break even if variable costs increase by 5% and fixed costs increase by 2.5%. So you then say break-even points in units equal to our revised fixed cost is 996,300 over revised contribution per unit, which is 4.25. Therefore, break-even points in units would then be equal to 996,300 divided by 4.25. That is 234,424. 234,424 units. That's it. That's end of the question. You can see break-even point is not it's not difficult. All that is required is to master the formulas and you are good to go. All right, let me know if you have any question on this so that I can switch. I can move to the next illustration. Any question? All right, so let's move on. Let's have another illustration. Let's solve illustration number 4. Illustration number 4. Let me look for, where is Lake? Yes. Adejimi Olalekan, read.
Okay, sir. I can't see the question, sir. Question is not on the screen.
Illustration 4.
The question is not on the screen, sir.
Oh, sorry. I thought I was sharing it. So
The following information is extracted by financial analysts from the books of Ojopagogo Industries Limited. All figures assumed to be correct. You are required to calculate I, the profit volume ratio, and II, the break-even point. B, I. A proposal has been made to increase fixed costs by 10,000 naira if sales and variable costs remain unchanged. Compute the new break-even point. II. The company is also considering another proposal for modernizing its existing plans. This will need additional fixed cost of 25,000 naira, with the expectation of saving the same amount in each of the direct materials and the direct labor cost, fixed volume ratio, the break-even points, and the profits of the company. C. Management accounting has an important role to play in decision-making. Discuss the statements explaining the concept which may be relevant and enumerate types of decisions to which they may be applied.
all right, thank you very much. Yes, that is the question. In the A part, two things you are required to do. The first one is to calculate profit volume ratio. Remember, I told you earlier today that contribution margin ratio is also known as profit volume ratio. All right. Then number two, you have to calculate break-even points. What kind of break-even points? Is it break-even points in naira or break-even points in units? The information given to you will tell you which of them you are supposed to calculate. So let me switch so that we can solve the question quickly. Solution. So illustration 4. Page 54. Ojopagogo. Industries. So according to the question, number A requirements, A Roman figure 1, you have to calculate profit volume ratio. And you know that profit volume ratio, which is the same thing as contribution margin ratio, is computed as contribution divided by sales, depending on the information available in the question. The formula you are going to use will depend on the information available. When you look at the table given to you, you will notice that you are given sales value to be total sales to be 1 million naira. minus variable cost of 800,000. That means we already have contribution margin of 200,000 naira. Therefore, 200,000 divided by 1 million. So here will be 200,000 over 1 million naira. This will give us 0.2 or 20%. Okay. Next, we're asked to calculate break-even points. So you need to ask yourself, what kind of break-even points? Is it break-even points in naira or in units? So depending on the information available, for you to be able to calculate break-even points in units, you are going to need contribution per unit. In the question, we don't have selling price, we don't have number of units, so it will be difficult to calculate contribution per unit. And that's why the examiner asks you to first of all calculate profit volume ratio. So in this case, number high, calculating break-even point. This will be break-even points in naira. Because in the question, we don't have selling price and we don't have number of units to assist us to calculate contribution per unit. Therefore, you are going to calculate break-even points in naira, which is computed as fixed cost divided by PVR, profit volume ratio. I will then go back to the question, how much is fixed cost? According to the question, fixed cost is 100,000 naira. 50,000 plus 30,000 plus 20,000, that is 100,000 naira. So here will be 100,000 over PVR of 0.2. So this will give us 500,000. Let me confirm. 100,000 divided by 0.2. 100,000 divided by 0.2. Yes, 500,000 naira. So we are done with requirement number A. We then move to requirement number B. You are told that there are two requirements in B. You are told that a proposal has been made to increase fixed cost by 10,000 naira. If sales and variable costs remain unchanged, compose the break-even points. So we increase fixed cost by 10,000. Number B, Roman figure 1. If break-even points, this will be break-even points in naira. So break-even points in naira if fixed cost increase by 10,000 naira. So I would then say break-even points in naira equal to fixed cost. The current fixed cost is 100,000 plus increment of 10,000 over PVR of 0.2. Examiner has told us that sales and variable costs will remain unchanged. All right? Sales and variable costs will remain unchanged. Therefore, 110,000 divided by 0.2. This will give us 550,000. That's the new break-even points in naira. Number B2. You are told that the company is considering another proposal for modernizing its existing plants. This will need additional fixed costs of 25,000 naira, with the expectation of saving the same amount in each of the direct material and direct labor costs. If this proposal is undertaken, compute the profit volume ratio, the break-even point, and the profit of the company. So we are told that fixed costs will increase by 25%, by 25,000 naira, with the expectation of saving the same amount on direct material and direct labor each. In this case, we need to calculate a revised income statement. Let me move to the next line, next page because of space. All right. So 3 things you are going to do. First thing first, you need to calculate a revised income statement. So the income statement given to you in the question will change slightly since we are told that fixed costs will increase. So in this case, our sales value will remain the same as given, which is 1 million naira. Sales is 1 million naira. Then you less variable costs. Under the variable costs, we have direct material. Direct material is 300,000. Direct material currently is 300,000. We're now told that we are going to save 25,000. So minus 25,000. This will give us 275,000. All right. Also, direct labor is currently 300,000. And we are saving 25,000. So the revised direct labor is 275. We also have other variable costs, like variable factory overhead, variable market expenses, variable admin expenses. Factory overhead. Variable marketing expenses. Variable admin expenses. 80,000, 70,000, 50,000. We then add it up. So 275,000 plus 275,000 plus 200,000. That's 750,000. 750 minus 1 million. Difference of 250,000. So the new contribution margin is 250,000. From the contribution margin, you then less fixed costs or period costs. Under the fixed cost, we have factory overhead, fixed factory overhead, we have marketing expenses, we have admin expenses, which is 50, 30, 20. 50, 30,000, 20,000. So you are now told that fixed cost will increase by 25,000 naira. Additional fixed cost. Did the examiner mention what they are going to spend the 25,000 on? Let me check. Additional fixed cost expense. Okay, we are not told. We are just told additional fixed cost. All right. So 25,000. Add it up. That's 125,000. Minus 250,000. That will give us a revised profits of 125,000 naira. That's one. The second part we're asked to do is to calculate profit volume ratio and break-even points. So we then calculate revised profit volume ratio, which is equal to contribution. Revised contribution is 250,000 over sales of 1 million. This will give us 0.25 or 25%. Then we calculate revised break-even points in naira, which is the revised fixed cost of 125,000 over revised contribution margin ratio of 25%. What do we have here? 125,000 divided by 0.25. That's 500,000 naira. That's it. This is what examiner wants you to do. All right. So number C, part of the question. You are told that management accounting has an important role to play in decision making. Discuss these statements explaining the concepts which may be relevant and enumerate types of decision to which they may be applied. Right? So examiner, you can see here, examiner mentioned decision making. And the examiner is asking you to discuss these statements and explaining the concepts which may be relevant and the type of decisions to which they may be applied. What the examiner is simply asking here is marginal costing technique. All right? You have to explain marginal costing technique and also the uses or the areas of application of marginal costing technique. That's what the examiner is simply asking you. All right, let me just show you so that we can solve one more illustration before we close. Let me open to the golden book and show you how I answered the number C part. Where is it? Let me check. Golden book. Where are you? Let me see. 1 minute. We can't complete the topic today because we have, if I take you one more illustration now, so I should be able to solve 2 more. And we can't solve 2 more illustration today. So that will be next weekend. Next Friday, by the grace of God. CVP, where are you? CVP. Okay. Which illustration is this one, sir? I hope I have it here. Let me check. Mhm. 1 minute. Okay, this is it. Yeah. So this is how you are supposed to answer the requirement number C. Management accounting plays an important role in decision-making to provide management with relevant and useful information suitable for making specific managerial decisions. The concepts which may be relevant to the role of management accounting include marginal costing concepts and relevant costing concepts. You then begin to explain each of them, all right, by saying that marginal costing technique is described as a decision-making technique designed principally to analyze and compare the relevant costs and the associated benefits of a particular course of action in making managerial decisions. It is also known as cost-benefit analysis because a cost item must be capable of being classified as either a variable cost or fixed cost. With the help of marginal costing technique, management can concentrate on the courses of action that are critical and strategic to business success to achieve a targeted organizational objective. For this purpose, marginal costing technique is designed essentially to aid managerial decision in the following instances. Cost volume profit analysis. This is the areas you can use marginal costing. We have done this in the past. Deleting of a segment, make or buy decision, special order, shutdown of capacity, adding of a new segment or product, optimal product mix, linear programming, pricing decision. All of those are the areas where you can apply marginal costing. Once you're able to do this, fantastic. You then move to relevant costing concepts. You explain, you define what is relevant costing, then what are the uses? I mean, what are the underlying criteria, determinants, factors of relevant costing? All right. By the time you mention all of that, your answer booklet is already full. A page of your answer booklet is already filled up. So that's it. This is what the examiner is asking you in that number C requirement. Okay, so let's move to another illustration. Let's go back to let's now go to multi-product break-even. Let's go to multi-product break-even. We treat this one. This is the last question tested by ICAN on CVP. So that will be in our next class. Let's solve one more illustration under the multi-product. Then in our next class, we are going to solve 2 more under multi-product. Let me see. So let's use this one as an example, as illustration number 2. We have about 30 minutes more. Let me read for you. Okay, let me even look for one of you to read. Is Meshach still on? Where is Meshach? Yes, Meshach, read for us. Mesh. Are you there? Oh, it's my network. I can't hear you. Meshach. Okay, if you are not there, Imam, read for us.
So my network was bad. I can hear you.
Oh, okay. Oh, yeah, go ahead.
Question what, sir?
Illustration 2.
Okay, question 2. What is break-even point? Babaisu Nigeria PLC manufacture 4 products.
Hold on.
At
Which
it,
one is Babasu? Babasue. Babasue. Yeah, go ahead. I can't hear you. I don't know whether it's my own network. Meshach, I can't hear you from here. Lekon, can you
Hello?
hear Meshach? Okay.
Hello, sir.
Yes, go ahead.
My network is very bad.
Okay. Let's do it this way. Imam, Meshach, don't worry. I think your network is even worse than my own. Imam, read. I've not heard your voice apart from your background noise earlier today. So read.
Okay, sir.
Meshach, you can mute yourself. Yes, go ahead, Imam.
Question A. What is the break-even point? B. Babasue Nigerian Limited manufactures 4 products at its Abidjan plant.
Yes.
For the coming financial year, its budget sales and cost structure for the product are as follows. The budget fixed cost for the same period amounts for 4 million. You are required to determine the number of units of each product to be sold for the company to 1. break even, 2. aim a profit of 2 million.
All right, thank you, Imam. So this is the question. Examiner is asking you to calculate break-even points. Okay, you have to determine the break-even points in units. You have to determine the number of units of each product to be sold for the company to be able to break even. So you want to calculate break-even point in units. Then number 2, the number of units of each product to be sold for the company to earn a profit of 2 million naira. All right. So when you look at this question, you will see that Babasue Nigeria Limited PLC manufacture 4 different products, A, B, C, and D. Because of time, let me stop sharing this and move to the working notes so that within the next few minutes, once we are done with our calculation of this, then we close the class. So the name, this is solution to illustration. What's wrong with you now? Solution to illustration number 2. That is page 53. That's number 2B. So in number 2A, examiner is asking you to explain or to define break-even point. You already know that. So let's move to B straight. All right. So like I told you, examiner is asking us, we then say calculating break-even point in units. Break-even points in units. That's the main requirement of the requirement number B1. So as you can see, Babasweb manufactures products A, B, C, and D, which means that Babasweb is a multi-product company. Therefore, and we want to calculate break-even points in units. There are 5 steps you are going to carry out. Step 1, you need to calculate. Don't go and be writing step on the day of your exam. Just move on. Do your working and move on. So step 1 is to calculate. You calculate overall contribution margin ratio. Overall contribution margin ratio. Contribution margin ratio is computed. Let me move to contribution margin ratio is computed as contribution depending on the information available over sales. So let's go back to the question. According to the question, you are told that you are given total sales. Total sales is 18 million naira. Total variable cost is 50% of 18 million naira, which means that contribution will be 50% of total sales. So I will then come here, contribution, which is 50% of 18 million. Let's restrict our number to 1,000 because of time. Then divided by 18,000. Here will be 9,000 divided by 18,000. So no need to be doing this. You already know that if variable cost is 50%, in fact, no need to be wasting time on this. Let me just leave it. You already know that variable cost is 50%, which means that contribution margin, a contribution will also be 50%. All right, so no need to worry yourself on that. Then step 2, you then calculate overall, break-even point in naira. To get the break-even point in naira, your fixed cost of the fixed cost of the company divided by overall contribution margin ratio. According to the question, fixed cost is 4 million naira. So here will be 4 million divided by overall contribution margin of 50%. This will give us 8 million naira. Step 3. You calculate sales mix. And we said that sales mix is to get sales mix, you divide the sales of each product with the total sales. So for product A, total sales of product A is 2250. Let's restrict our number to 1,000. 2250. 2250 divided by total sales of 18,000. What do we have there? For product B, total sales of B is 4050. 4050 divided by the company's total sales, 18,000. For product C, sales of product C is 5,400. Divided by total sales for the company. Then product D, 63. Divided by 18,000. So what do we have here? Lekon, are you still there?
12.5.
12.5%. 12.5% or 0.125. Next one.
22.5.
22.5 or 0.225. Next.
30.
30.0.
30% or 0.30. Product D.
35.
35% or 0.35. If you add everything together, I must give you 100% or 1. All right. The total of this must be 100% or 1. Okay, so this is how to estimate sales mix. Then step number 4 now. I'm going to merge step 4 and 5 together. Step 4 and 5, which is to calculate break-even points in naira and units. So examiner asks you to calculate let me see, A, B, C, D. Let me leave it as it is. So examiner wants you to calculate the number of units for the company to break even. So there's no way you'll be able to get number of units or break-even points in units without first of all calculating break-even points in naira. So the first column will be the products. Here we have products A, B, C, and then D. Then next is sales mix. We have 0.125, 0.225, 0.30, 0.35. Okay.
Now we did an Irish fry back. Now we did an Irish fry back.
Are you talking to me? See your life outside. We've forgotten you are in the class. You not even mute your mic. All right. So here is 1. So the next thing will be break-even point in Naira, then selling price. After selling price, we then have break-even points in units, which is what the examiner wants you to do. Okay then. So give me the selling price for each product first. What's selling price of A?
100 naira.
B?
450.
C?
300.
And D?
200.
200. So watch out. Then we want to distribute. Remember, in step 4, which is to calculate break-even point in Naira, what are you supposed to do? You multiply the 6 mix with the break-even points, with the overall break-even points in Naira. That is, you multiply step 2 and step 3 together. So in step 2, we calculate overall break-even points of 8 million Naira. All right, so I will then come here, 8 million Naira. That's what I want to share. So to now get the share of each product, you multiply with the 6 mix. Therefore, 8 million Naira multiplied by 0.125 equal to 1 million Naira. Then to get the break-even point in units, you divide by the selling price. So divided by 100 Naira equal 10,000 units. Then 8 million Naira multiplied by 0.225 equal 1,800,000 divided by 450 equal 4,000 units. Next, 8 million multiplied by 0.3 equal 2.4 divided by 300 equal 8,000. The last one, 8 million multiplied by 0.35, 2.8 divided by 200 equal 14,000 units. So that's the answer to requirement number A. You can see it's not difficult if you master the procedures. So number B part, or requirement number 2, you have to determine the number of units for each product to earn a profit of 2 million. We have a targeted profit of 2 million. Therefore, requirement number 2, you repeat the procedures again. Calculating break-even points in Naira, in units. Break-even points in units to earn a profit. What's wrong with you? To earn a profit of 2 million. So in this case, you want to earn a profit of 2 million. You need to first of all calculate the contribution margin ratio will still remain the same. So just repeat the step. Contribution margin ratio still remain the same as 50%. Right? Step 2 is to calculate break-even point in Naira to earn a targeted profit of 2 million. So in this will change. This will then be equal to fixed cost plus targeted profit before tax divided by CMR, contribution margin ratio, which is equal to fixed cost is 4 million Naira, targeted profit is 2 million, over contribution margin ratio of 50%. Therefore, the new break-even point in Naira will be 12 million. Step 3 is 6 mix. It's still the same 6 mix, so no need to just skip this step 3. There's no need for you to write it out again. So let's make step 3 to be step 4 and 5 now, which is the final one, 4 and 5. So this will be 3 and 4. Or let me just do it this way. Step 3, 6 mix. This is, let me just same as above. Same as 1 above. Okay, that's requirement number 1 above. Then 4 and 5 now. Break-even point in Naira and units. That's it. It's not difficult. You just have to shine your eye. Ensure you are doing the right thing. So first column is products. Sales mix. Break-even point in Naira. Selling price. Break-even point in units. Product A, B, C, and D. All right. You can see break-even points or CVP analysis is very interesting. Very, very interesting. Okay. 0.125, 225, 30.35. We want to distribute 12 million. Selling price is 100 Naira, 450, 300, then 200. So I would then say 12 million. 12 million multiply by 0.125 equal 1.5 million divided by 100, that's 15,000 units. Next, 12 million multiply by 0.225, 2.7 million divided by 450 equal 6,000 units. Then 12 million multiply by 0.3, 3.6 divided by 300, 12,000 units. The last one, 12 million multiply by 0.35, 4.2, then divided by 200, 21,000 units. So these are the units of each product that must be produced for Babasue to break even. That's end of the question. You can see it's not difficult. So in our next class, by the grace of God, we are going to have 2 more technical questions under multi-products. All right. Let me know if you have any question for me so that I can release you. Some of you have disappeared. Adejimi, Lekon is still on. Yes, Tosin, what's your question? Talk to me.
Yes, sir. I just want clarity on the start point when you work out the contribution for the overall contribution. You just use 50%, right? So is it because it is a multi-product instead of saying selling price minus units, minus variable cost? You just use 50% on the sales. I just want to get it right. Thanks.
Okay, so what examiner, according to the question, examiner has already told you that when you look at the table given to you under the Babasue, when you look at the table, you see that variable cost is given to you as 50% of 18 million naira. Variable cost is percentage of sales according to the question. So, and you know that contribution is sales minus variable cost. So if variable cost is already 50% of sales, that means contribution is also 50% of sales. That's why we use 0.5.
Thank you, sir. Very clear.
You're welcome. All right. So, yes, Lekon, Adejimi, Imem, Idrisu, where are you today? I did not hear your voice. Ijoma, it's okay. Ijoma, Michael, Amen, Oluchi, yes, Tosin, Phillips, are you there?
Yes, sir.
How are you today?
Fine, sir. Thank you.
Yes, you're welcome. Ramoni, you are the one that was making noise earlier today. You are going to pay the price next week by the grace of God. You are the one that will read throughout whatever the question we are going to solve next weekend. All right. Ramoni, are you there? Speak to me now. If you don't
Yes,
speak,
sir.
I will go ahead. Aha. It's all right. Yes, I can see Samuel too. Samuel James, Tolulope, then Yada Sisi. Yada has already apologized. Apology accepted. Okay, then. That will be the end of today's class. Please ensure you go through your materials. As you can see, time and time wait for nobody. Poco a poco, little by little, we are getting to the D day. All right, your exam day is getting nearer every day. Today is April 10th, right? Today is April 10th. Practically, you have about we have 20 more days in the month of April, then plus 19, let's say plus 18 in the month of May. So practically you have about 38 days to your exams. So guys, time is going, all right? Please, you have you have huge responsibility to be able to defeat ICANN on that day. Rome is not built in a day. Please, if you have not registered for this exam, you have to do that as soon as possible. Time is going. Don't wait till the month of May when you are going to be under prayer. Because once you enter May, there will be so much traffic on the ICANN portal. And that's why it is better for you to do whatever you need to do now in this month of April before you move to May. So that pay for your exam, register for the exam. If you have any exemption, pay for your exemptions and you are ready for the exams. All right. So this is once you make your payment, then of course your mind will be there that you have committed so much. Therefore, you have to limit your sleeping time. You just have to limit your sleeping time going forward and be committed to that goal that you want to achieve. Because on each day, for each day that pass, you are getting nearer to the D-Day. So God will make it easy for you. You have responsibility to succeed on this day of your exams. The money that you have paid, your sacrifices for January to date, you have to make them count. We will continue to sing it to your hearing until the final day when we are going to bid you bye. And then we'll be praying for you from behind to succeed on the day of your exam, so that at the end of the day, when your result is released, all of us, it will be a win-win thing. You are the one that need the success. We are the one that will claim the pride, because it will be our pride for you to succeed. Once you succeed, then we can say, okay, we contributed to your success story. That's all we need from you. If you win a prize for us, that's also a plus, and that should be your target. We've said this severally in the past. So guys, time is going. Time is going. Every minute, every day that you see yourself on each day, you need to remember the goal that you want to achieve, and your goal is to pass all the subject that you want to write for this diet. No other goal should matter to you for you to be able to pass your exams. And because all these things has a timeline, once you clear your paper, come the final week in the month of June, when your results will be released, or first week in the month of July. Once you clear all your papers, the motivation will be there. You want to go to professional level straight. So please, guys, make it count. Make all your effort count. God will reward you accordingly. We'll see you next time by the grace of God. Good night, everyone. Bye-bye.
Good night, sir. Thank you very much.
Good night. Thank
You're
you, sir.
welcome. You're welcome. Yeah, good night. Okay.